Hey there, Stuart Levitt, Realty Experts. Let's talk about mortgages. Should you take out a 15-year or a 30-year mortgage? That question has haunted philosophers throughout human history. After 20 years in the mortgage industry and having traded on Wall Street, I can tell you there is no right answer. My high school Spanish teacher used to say, nada es gratis, or nothing is free. Let's discuss the pros and cons. Great news, there will be no math on this video. Let's talk about the 15-year mortgage. For those who want to pay off their mortgage quickly, the 15 years is a great option. Had you taken that out just 15 years ago, you wouldn't have a mortgage right now. Of course, you probably may have refied or moved, and in that case, basically, you would have forced yourself to have less cash in hand during that period of time. The 15 years is also for those who want to pay less interest back to the man. That's true for two reasons. One, you borrow money for a lot less time, 15 years less, and all things being equal, the actual interest rate on a 15-year loan is less than a 30-year loan. And alluded to just a moment ago, your monthly payment is significantly higher with a 15-year mortgage. Sure, your interest component is less in your payment, but when you are borrowing hundreds and hundreds of thousands of dollars, you're committing to pay that same money back at twice the speed of a 30-year mortgage. That means a much larger payment. Now let's turn the focus onto the 30-year mortgage. The traditional 30-year mortgage is all about flexibility, which, as just mentioned, basically means you're not committed to making such a large payment that the 15-year mortgage demands. Thus, your monthly obligations are considerably lower. That may be very important to you. If that is the case, you can stop right now and go with the 30-year over the 15-year. If it is not currently a major factor, ask yourself, might it become one later? If you're locked into a 15-year mortgage, it might be kind of tough to change. Are you saving enough for retirement? Enough for college? Do you have big expenses on the horizon in a few months or years where you might need that cash? What will happen with taxes and the economy? How secure is your job? Or on the other side, with the money you will not be spending to pay down that 15-year mortgage, you might be able to afford that other house you really wanted, but just couldn't reach. It is true you will pay more in interest, but that is over 30 years. But you'll probably sell your house before that time anyway, and you will start this all over. Incidentally, hopefully, you will consider me as your agent and not your brother-in-law, Shemp. So the great philosophical question remains, should you take out the 15-year or the 30-year mortgage? At Realty Experts, we bring perspectives, not absolutes. If you would like to discuss this or any other financial aspects related to a home purchase or finance, give me a call. For now, this is Stuart Levitt at Realty Experts, where experience matters.